8 influencers, 8 portfolios, and finally, Bitcoin got outperformed. Plus, one shocking case of influencer manipulation or just plain incompetence. Let's start with House of Crypto. I skipped him in the last video and a bunch of viewers weren't too happy about that, so here he is again. In his October 4th, 2024 video, he revealed his full portfolio along with exact allocations. He kicked off by saying it was time to go heavier into altcoins, holding only 10% in BTC. Let's see how that aged. As the title suggests, the portfolio consists of 28 coins. As of today, only one out of the remaining 27 coins outperformed Bitcoin, and that's Sui. It also had the highest allocation at 20%, so the top conviction play did work out. The rest didn't. Performance is tracked from the video's release date. You could argue the results are skewed by how rough the last few months have been for alts, so let's start with the Bitcoin chart this time. At its peak in early December, the portfolio only outperformed BTC by about 20%. Then it started bleeding, giving up over 50% of its Bitcoin value by April. The recent bounce hasn't been too encouraging. It could recover if market conditions improve, but so far, it underdelivered even during the altcoin outperformance window from November to December. The USD chart, as expected, looks a bit better. The portfolio nearly doubled by early December, but then dropped close to 65% from that high. After the bounce, it's hovering around break-even. Not great, not terrible. Overall, this portfolio was a bet on diversification, trying to cover all the narratives House of Crypto saw as relevant. And the more portfolios I analyze, the clearer the pattern. Highly diversified altcoin portfolios tend to underperform Bitcoin in the long term. Even during favorable altcoin moments, they barely pull ahead, because not everything pumps harder than Bitcoin, and holding too many coins across too many narratives almost guarantees you'll end up with a bunch of underperformers mixed in. Final numbers. The portfolio peaked at plus 97% in USD and plus 19% in BTC. Current value is plus 4% in USD and minus 42% in BTC. Now let's take a look at Elio Trades, one of the biggest voices in crypto YouTube with over 500,000 subscribers. In his September 30th, 2024 video, he unveiled a portfolio of 17 coins. 60% of the allocation went into more established names, BTC, ETH, SOL, and even Coinbase stock. The remaining 40% leaned into higher-risk alts from gaming, AI, and meme narratives, with picks like Beam, IMX, Ronin, Gun, Mog, Akash, Ayaz, Desync, Tau, and Super. There were also NFTs in the mix, but I decided to leave them out for simplicity. They're illiquid, and one of them, Pudgy Penguins, cost 10 ETH in September, meaning the budget would have had to be huge to allocate 1% to it. The other two NFT allocations weren't even disclosed. For the alts, I assigned 4% to Super since it was labeled the highest conviction pick but had no clear number. The rest of the unallocated portion was left in USDT. The USD performance follows the trend we've seen with other safe, diversified portfolios. Lackluster upside, but a much shallower drawdown. It only climbed about 50%, but at its lowest, it never dropped more than 30% from the starting value. That shows the overall stability of the picks. After a decent bounce, it's now back above break-even. The BTC valuation tells the familiar story. It never outperformed Bitcoin and just bled value slowly during the downturn. At its worst, it was down over 40% in BTC terms. Even after the bounce, it's still sitting almost 40% below the starting BTC value. Overall, Elio's portfolio leaned heavily into blue chips and Coinbase stock, 60% of the total, making it one of the most conservative influencer portfolios so far. But once again, not a single position outperformed Bitcoin. Playing it safe helped preserve USD value, but it couldn't hold up in BTC terms, and it missed the upside when the market rallied. If you're not outperforming Bitcoin, you're just taking on extra risk for no reason. Numbers don't lie. Final numbers. The portfolio peaked at plus 50% in USD and plus 0% in BTC. Current value is plus 6% in USD and minus 37% in BTC. And now someone with a radically different view, Murad. While Elio and House of Crypto leaned into blue chips and safer plays, Murad went all in on memes. He made headlines with his meme coin supercycle theory at token 2049 in September 2024, and just a week before that, on September 12, he shared his only portfolio, 10 meme coins. Unlike most influencers who constantly shuffle picks, Murad stuck with his list. The portfolio is in a league of its own. It exploded 10x in just a month, moved sideways for a while, then peaked at 24x in January, all within 4 months. Since the market pullback, it's dropped quite a bit but never dipped below its starting point. In BTC terms, it nearly 10x'd within the first month, peaked higher on the second run-up, and still holds around a 3-5x today. Here's the catch. Nearly all those gains came from one coin, SBX 6900. USA also outperformed Bitcoin, but the other 8 didn't. SBX alone, up over 70x, carried the entire portfolio despite being just one of 10 equally weighted picks. What makes this even more interesting is that Murad's wallet addresses were exposed by ZachXBT, letting us compare his public portfolio to his real trades. His total investment across wallets was just under $2 million. At the peak, his holdings hit $59 million, a 31x return, and even now they sit over 10x. So yes, he's up more than his published list, but not by a massive margin. There are a couple of reasons for that. He started buying earlier, back in March, and his allocation to SBX was higher than 10%, unlike the equal-weighted public list. Whether you go by his public picks or private wallet, the difference mostly comes down to timing and weighting. And either way, Murad's performance is the best by far. It's the only portfolio still outperforming Bitcoin, and not just barely. Taking the risk was worth it. Murad bet on memes, held firm, and for now, he's the only one who made alts really work. Final numbers. The portfolio peaked at plus 2,299% in USD and plus 1,121% in BTC. Current value is plus 791% in USD and plus 341% in BTC. Let's take a look at someone else who leans heavily into high-risk plays, Alex Becker. He never disappoints when it comes to entertainment, but what about his altcoin picks from September 2024? His portfolio consisted of 16 coins, mostly gaming-related. You've got Beam, IMX, Cetify, Big Time, Super, and a couple others. There's also some exposure to AI with Paul, Ayaz, Desync, Palm, and ZKML. Unfortunately, Becker's coins didn't match his YouTube performance. Almost every coin is down, and many are down badly, all while Bitcoin is significantly up since September. Looking at the USD chart, the portfolio had a decent run into early December, doubling in value. But once the market started breaking down, it lost nearly 2/3 of its original value, bottoming out in early April. The latest bounce isn't bad, but it's still nowhere near break-even. The Bitcoin chart tells an even clearer story and highlights the difference between this and the so-called safe, diversified portfolios. The safe ones barely move in good times and slowly bleed in bad times. This one kicked off with a sharp pullback, down 30% in BTC terms by late November, followed by a huge 2-week bounce, doubling against Bitcoin. But once the market turned, it completely collapsed, losing over 3/4 of its Bitcoin valuation. Betting big on gaming hasn't been a winning move for a while, and in Becker's recent videos, he rarely mentions it anymore. Seems like he might have finally given up on it. Becker's results remind us that risk-on strategies can just as easily flop. Murad's win was far from typical. You have to pick winners. And when Bitcoin dominance is rising, that's no easy task. Becker's heavy bet on gaming didn't pay off. Final numbers. The portfolio peaked at plus 102% in USD and plus 34% in BTC. Current value is minus 37% in USD and minus 62% in BTC. VirtualBacon. I mentioned manipulation in the title of this video, and no, it wasn't clickbait. You can judge for yourself, but first, let's break down the portfolio. Back in September 2024, he launched a new portfolio video. From that point on, instead of just listing coins, he created a live spreadsheet that tracks every move he makes, and to his credit, he still updates it. So we get to compare the original, passive portfolio with the fully active version that follows all his updates. And there were a lot of them. The initial setup had 22 coins, with 60% of the portfolio split evenly between BTC, ETH, and SOL, 20% each. Super got a double allocation at 4%, while the remaining coins were spread at 2% each. That included Ton, Phantom, Ondo, Mantra, Prime, Mog, Tau, Delicium, and others. Performance-wise, the original portfolio did okay in USD terms. A solid rally in December brought it close to a 2x, before dropping to around minus 18%, and now it's sitting slightly above break-even. But in BTC terms, every single position underperformed Bitcoin. ETH lagged once again in a market where BTC has been consistently strong. The BTC chart shows a slight push early on, followed by a 50% drop from the peak. The bounce hasn't changed the picture much. So, what about the active version, the one with all the portfolio tweaks? Surprisingly, not much difference. Despite all the trading, the results are nearly identical to the original setup. And that's before factoring in transaction fees, which would drag performance down even more. All that effort and no better outcome. Maybe things will change if the market turns more favorable for alts, but so far, it hasn't paid off. Final numbers. The portfolio peaked at plus 95% in USD and plus 16% in BTC. Current value is plus 19% in USD and minus 35% in BTC. Now here is where the manipulation comes in, and I broke this down in more detail in my newsletter, linked below if you're interested. In his May 12th livestream, VirtualBacon explained why he exited his low caps under 300 mil market cap back on March 20th. His argument? That low caps underperform BTC, Sol, and ETH during early recovery phases. To prove it, he pointed to the Others index, which tracks alts outside the top 10. But here's the issue, Others doesn't include low caps. I laid out the evidence in my newsletter, and you can verify it yourself. So he's claiming low caps are underperforming and using an index that doesn't include them to prove it. That's not valid. He also showed some alts outperforming others, again, not a fair comparison if you're talking about low caps. Let me show you what he should have compared, the actual alts he sold versus the ones he bought instead. As of May 12th, their performance was pretty much the same. The numbers speak for themselves. Next up, Deutscher. On September 9, 2024, he shared a simple 5-coin portfolio, Sol, WIF, PayPay, Mantra, and Tau. The trend of keeping it clean and focused during uncertain times continues. Just 5 coins, mostly blue chips across top-performing narratives. Performance-wise, some coins showed strength and even outperformed Bitcoin. Others didn't hold up and dropped in USD terms. One important detail here, as far as I know, Miles sold his Mantra before the big crash in April. He didn't catch the entire run-up, but it ended up being the right call. Normally, that'd be outside the scope of this video, but the Mantra collapse was so brutal, it's worth mentioning. Looking at the USD chart, the portfolio did well early on, peaking close to 30K, a clean 3x in just a few months. From there, it pulled back slowly, right up until the Mantra collapse, which dragged the whole portfolio underwater. It's since recovered above break-even, but it's still far from reclaiming its previous high. The BTC chart shows the story more clearly. Among the safer portfolios, this one stood out with strong performance. It climbed over 60% against Bitcoin by early December and was still near the top by March. Most other portfolios had already faded by then. It even stayed green against BTC up until the Mantra collapse. But since then, it's been struggling to regain momentum. Overall, this was a solid portfolio of relatively safe alts, essentially category leaders. And Mantra's story is a perfect reminder of how volatile crypto can be. One token can make the whole portfolio shine, and one sudden move can undo it all. The trend of leaning into safer picks during uncertain times continues, but as we've seen before, it often ends up underperforming Bitcoin in the long run. This time it looked like an exception, but mostly thanks to Mantra's monster run, which didn't have a happy ending. Final numbers. The portfolio peaked at plus 192% in USD and plus 62% in BTC. Current value is plus 21% in USD and minus 38% in BTC. Brian Jung shared his portfolio on November 8, 2024, and it's one of the more diverse ones we've seen. 25 coins total, including names like Virtual, Pro, Rari, Well, Talent, Normie, Ski, Tau, Render, FET, Goat, Sol, Ray, and WIF. This reflects a semi-diversified strategy. not as spread out between narratives as VirtualBacon, but also not as focused as Becker or Murad. The key narratives are AI agents, general AI, memes, and Solana plays, with a few picks outside of those themes. Performance-wise, it started strong. As expected, for the video dropped right before the altcoin rally in late 2024. The portfolio peaked near 28K, fueled by strong runs from coins like Virtual and Ski Mask Dog. But once the market turned, it crashed hard, losing almost 85% from the top. The recent bounce pushed it back above break-even in USD terms. That's what you expect from a portfolio full of low-cap alts. Big upside when things are good, but brutal drawdowns when sentiment shifts. The BTC chart shows the same pattern, a strong start, doubling against Bitcoin in just over a month. But it broke down sharply in January, bottoming like most alt portfolios in early April. It's bounced since then, almost doubling again in BTC terms, but it's still sitting below its starting point. If market conditions stay strong, it can outperform. But if they weaken, this kind of setup tends to bleed fast. That's just how low caps behave. The main takeaway: Brian picked a few strong performers, but they're drowned out by too many underperformers. With 25 coins, most of which didn't beat BTC, the odds of long-term outperformance are slim, especially with Bitcoin dominance continuing to climb. In this environment, broad diversification like this just doesn't work. Final numbers. The portfolio peaked at plus 180% in USD and plus 94% in BTC. Current value is plus 2% in USD and minus 33% in BTC. Now let's take a look at a portfolio that went live just after the big liquidations triggered by the yen carry trade unwind. This one's from Ran of Crypto Banter, published on August 5, 2024. It's a simple, high-conviction setup with 6 coins: Bitcoin, Ethereum, Solana, Arweave, Rune, and Pendle. A concentrated mix of Ran's strongest picks, as most influencers tend to do right after a sharp correction. Looking at the USD chart, it climbed steadily through September and October, then accelerated in November, peaking in early December at nearly 24K. More than a 2x in 4 months, but considering market conditions and other portfolios, the gains weren't anything special. Then came the pullback. Like most portfolios we've seen, this one gave back a lot of its gains through February and March, bottoming around $8,300 in early April. As expected from a safer setup, it didn't break down completely. It has since bounced back above break-even, but it's still a long way from reclaiming its high. Percentage-wise, the bounce wasn't as aggressive as some of the riskier portfolios, but because it didn't drop as far, the result isn't terrible. The BTC chart tells the real story. From the start, this portfolio struggled to outperform Bitcoin. The conservative approach didn't pay off. Starting in December, it began a slow bleed, eventually losing about half of its BTC value by April. The most recent bounce has been weak in BTC terms, barely any traction. This portfolio confirms that without higher risk, higher reward plays, you're probably better off just sticking with Bitcoin. These were relatively safe picks, which helped limit the losses somewhat, but there wasn't enough upside to outpace BTC. It's another reminder that when Bitcoin is leading the market, taking more risk might be your only shot at outperforming. Final numbers. The portfolio peaked at plus 138% in USD and plus 17% in BTC. Current value is plus 41% in USD and minus 38% in BTC. That's all for today. Remember, numbers don't lie.